Hello, hello, hello. Welcome to Al Stock Trades. All right, guys, this is going to be an important video for each and everyone that is watching. Check this out, guys. This is one of the most important videos. So I have been getting a lot of questions. Al, are you sure your intrinsic value calculation works? Al, this doesn't seem to be working, right? So in this video, by the time you finish it, all of your questions are going to be answered. I made this video, as you can see here, about 4 months ago, and I titled it Unveiling the Intrinsic Value of Robinhood Stock, Price Targets, and Hidden Value. We're going to go ahead and we're going to be reanalyzing this video and seeing how can we extrapolate on why the Clover Health stock has not achieved its intrinsic value. We then are going to be calculating a re-up on the intrinsics and for Clover Health. And by the end of this video, you're going to walk out with what I hope would be some really great insights. Keep the chat going on the live chat section. This is a live video. Again, nothing is pre-recorded here. It's all live. Okay. So let's go ahead and let's start off with this. And then I'm going to go ahead and just shut up. And then we're going to watch the video and we're going to stop it and comment. And we're going to see the intrinsic value. Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and calculate the intrinsic value instead of price target for the Robinhood stock and decipher whether it is essentially a good deal and if it's undervalued or not. So stick around, and by the end of the video, you'll have a clear understanding of where the stock could head. We're going to go ahead and I have a short presentation here regarding Robinhood stock. If you want to get a little bit more deeper dive, not the price targets, which will be in this video, but a more deeper dive of the paper here, you can go to fundamentnews.com and search for the Robinhood article I just wrote. This is a free article for retail investors. I just want to help the community out. And so, yeah, this is kind of a summarized version here. So overall, there's some key challenges associated with Robinhood. There's a declining performance indicator known as the revenue and trading volume. Options trading has been really the cornerstone of this platform. There's been a drop in equity and crypto transaction revenues. And there's also some risks to the UK and EU expansion, as I believe they don't have the availability to do payment for order flow. Now, the last one is kind of something I don't really care about, but I just wanted to place it in here. There's a questionable sustainability of the gold plan, because right now they're paying folks a lot of interest rates for this, and about 5% interest rate, and it pays for itself. But the problem is, once interest rates go down, then what happens to the sustainability of the gold plan? But most folks don't understand is once interest rates go down, growth stocks go up. People want to go into the market, and then they're going to want to be on margin, and then I believe the gold plan gets you better margin rates, et cetera, et cetera. Now, in terms of the positive outlook, you do have signs of resilience. There's improvement in the operating cash flow, which we'll right now talk about. Enhanced mobile app for crypto trading. We also got the ETFs being granted for crypto. It's in a really great financial position with significant cash reserves. Now, mind you guys, I actually made this video 4 months ago. Specifically, I made it on November 27, 2023, right? Right before we got the crazy rally, or in the process of it. And in this video, you're about to see what price was the Robinhood stock. From the bearish perspective, there's the challenge in the KPIs, regulatory hurdles, and the gold plan. But we already talked about, I don't really think the gold plan is a bearish view there. In terms of bullish, just improved. I said I don't think the gold plan is bearish. While CNBC and the incumbents and everyone who was basically saying, all the analysts, that the gold plan was crap. Okay, just like what they're saying about the Clover Assistant, it's crap, right? I don't think so. Improved cash flow. In fact, it's actually free cash flow positive now. It went from negative to positive free cash flow. And just like from day one, for all the people that have purchased the Mastering Stock Market course with the intrinsic value calculation lifetime access, how many times have I told you a company needs to go from negative to positive free cash flow, negative to positive free cash flow? When I made this video 4 months ago, November, December, February, March, about almost going to be 5 months ago, Robinhood went from negative to positive free cash flow. Okay, they did it. And this is why I was very confident when I was setting my price target, which you'll see in the video. And it's there's like a focus right now on generating those solid cash reserves. And just overall, it's mixed. And we're going to go ahead and talk about it. here. So overall, just really quickly, the revenue's been basically growing. The question is does Robinhood carry the same brand that it did post AMC, GameStop? The reason why I say these meme stocks is because they restricted trading on them. But in Robinhood's defense, other platforms also restricted trading on AMC and GameStop because they did not have the cash reserves to front up the trading, because that's just how the hurdles are and how, essentially, the SEC created its little shenanigans. But I think, every year new people enter the market, and the smell of AMC and GameStop will fade away for the new market participants. Like I told you, many individuals were basically sharing, saying Robinhood is not going to grow because of AMC and GameStop. Well, I said the smell of it is going to dissipate, go away as new market participants come on forth. Well, the crypto people are here now, and you can see ultimately Robinhood is flourishing. So like I said, and a great example is that retail investors do technical analysis and short-term trading. Long-term investors, they utilize the short-term, but they also look at the long-term fundamentals. Unfortunately, just like I said, retail investor sentiment has changed. Now everyone is on top of Robinhood. CNBC's perception has changed. And we're going to, let's continue with this video because there's a lot of nuggets in here. And keep adding the questions on the left side. I do see them, and I'll respond to them after when we finish this video here. It won't be for a while, but it definitely will. In terms of gross margins, the gross margins of Robinhood is just amazing. It's still a net income negative, as you can see here. But interestingly, it's now just turned operating cash flow positive, which is why we're making this video. And then also, of course, free cash flow positive because, it's derived from the operating cash flow. And so you have improvements in working capital, and the company is essentially becoming profitable, right? And here's the book value. So overall, it's looking pretty good. Now, in terms of now before we go ahead and switch off to the next tab here, you can see that the gross margins are 88%. That means they get to keep 88% down, right? That's really good, okay? And you could see it went from negative to positive free cash flow, almost negative $1 billion, 900 million, to positive $377 million, okay? And the book value obviously increased. So again, the fundamentals are improving. Many people say, oh, fundamentals are not good. They don't really tell you anything. Those people, they don't. Again, guys, listen, I've done pretty well for my life, okay? Why do you think someone to my degree is wasting their time on YouTube right now trying to teach the masses this, when I could spend my time and doubling down and spending more time on my research and being the best in my field? I think I could do both, but this is a big issue with retail investors. They don't know this. They don't know what intrinsic value calculation is, right? So you kind of have to ask yourself, why is someone who's going to become a brain surgeon going ahead and also doing this? It's not in his best. Like, you look at market unit economics. Is this in my best interest, right? Why am I doing this, right? So let's go ahead and let's continue watching. This is what analysts are thinking here. It's thinking that they're going to grow around 10%. If you were to look at... And analysts are stupid, right? They think it's growing around 10%, right? Let's continue. At the HOOD stock, just really quickly, just looking at the price here. Year to date, it's up 3.84%. So when we were making this video, the HOOD stock, Robinhood, was $8.39. $8. When we made this video 4 months ago, the HOOD stock was $8.39. We made it on November 27th of 2023. In fact, let me go ahead and share with you this other screen here where we could look at the HOOD stock now. Okay. The HOOD stock now is $20. Okay. The HOOD stock is $20 now. So if we were to go ahead back on November 27th, when it was $8.39, again, guys, the timeline doesn't lie. Okay. The timeline doesn't lie. Okay. Here, right here, November 27, it is up 138%. Let's go ahead and zoom in on this. Okay. 138%. That's how much it's up right now. So let's see if the intrinsic value is actually full of crap, right? Well, let's go ahead and watch the video and let's see if the intrinsic value, and I was able to predict this. Let's see, the truth is in the pudding here, okay? And then we'll go ahead and relate it back to Clover Health. Let's continue. A year, it's down 8%. 5 years, max is down 76%. So, there's definitely, the stock's definitely fallen like a rock. Now, Cathie Wood has started to double down on this company, but overall, it's growing at 29%. So we're going to have 3 different types of intrinsic value calculation. One is going to be based off of the growth rate of what they expect. around 10.10%. The other is going to be the growth rate of the revenue, which is sitting at around 29%. And the other is the historic growth rate from 2019 to 2023. Now, granted, I don't think they're going to be able to get to this growth rate to be rate of what they expect, around 10.
So I went ahead and did different intrinsic value calculations based on different trajectory pathways based off of revenue and based off historic revenue, current revenue, and analyst revenue.
0.10%. The other is going to be the growth rate of the revenue, which is sitting at around 29%. And the other is the historic growth rate from 2019 to 2023. Now, granted, I don't think they're going to be able to get to this growth rate.
The reason why I don't think they're going to be getting to this growth rate is because this was when everyone was at home. We had a freaking pandemic, which I don't think is going to happen in another 100 years based off of probability. And if you look at the bull case here, $265, yeah, I doubt we're going to see these prices anytime soon. Maybe in 20 years from now, 15, 10 years, 20 years, who knows? But it needs to grow 59%, which I don't think is going to happen because of, there's no COVID and people staying at home. So let's continue.
The only way is if we get another bull market like 2020, which people are at home, there was a pandemic. So the probability of that, I would say, is very, very low. But it is in the house of cards. But my evaluations are nowhere near this price.
And I tell you that my evaluations are nowhere near this price. This is too bullish for me. This is incorrect, in my opinion.
Call this maybe the roof. Interestingly, if you look at the price and the historic price of Robinhood, it's gotten as high as $55. So we're going to go ahead and do an intrinsic value. How you doing? Brilliant. How you doing, Freudian slip? Hey, it's good to meet, have you guys here. Come on in. So overall, if you look at the 10% growth rate.
Now, this is what analysts were projecting, a 10% growth rate. They were manipulating the stock. It wasn't growing at 10%, right? That's what they're saying that it was growing at, and that was the intrinsics, right? And that's why the stock price was around this region.
Which is about where it's growing at now. You can see a bear of 5 and a bull of 9. So there is some form of underevaluation. I think it's going to grow anywhere around 29%.
And I said, I think, so now let's go ahead and make it slow. I'm going to repeat everything I said. I specifically just stated, I think it's going to grow anywhere between 29%. Let's go ahead and now let's watch this.
Okay? Oh, you can see a bear of, I think it's going to grow anywhere around 29%. And I use the free cash flow at 377 million. Interestingly, if we were to look and multiply the revenue by 5%, you actually would get a number less than 377 million because if you look at since this is a high gross margin company,
let's go ahead and
because we would get a number.
Let me go ahead and restart that. Sorry,
for less than 377 million because since this is a high gross margin company, it's actually 20% of free cash flow. So it is obviously a superior business model. I mean, if you look at the revenue, it has 1.7 billion, so 1774 million. So if we were to put 1774 millions, and if we would have put 20% to estimate, I have to restart it here. You would have, just do it here, 1774 multiplied by 0.2, you would get 355 or 354.
So you know what I'm doing? So you know how I take the revenue and multiply it by 5% to estimate the future free cash flow? The reason why I do 5%, because historically, if I've analyzed thousands of companies, okay? Thousands upon thousands of companies, okay? And I found that 5% is a great value of where revenue can traffic down the free cash flow. Now, since Robinhood has a gross margin of 88%, that means we could use approximately 20% as the estimation of free cash flow rather than 5%. But even if you do 20%, which is crazy, you still get $354 million in free cash flow, when in reality, Robinhood has 377, which means that they're operating even better than the 20% of estimation of free cash flow. Repeat this video multiple times, guys. This is a very important concept.
4 million. Technically, they actually have a free cash flow that's actually higher than 343. So they're growing more than 20% of revenue. So it's obviously a superior business model, and their gross margins can prove it. So I think that this stock, if I were to assign a price target,
here it is. Ding, 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 ding. I'm gonna go ahead and restart it. This is where I give you my price target. I said, I think if I were to assign a price target, are you guys ready for the reveal? Here it is.
Prove it. So I think that this stock, if I were to assign a price target, I would go ahead and give it a price target of anywhere between $18 to $20.
I would give it a price target between $18 to $20. If you don't believe me, go watch the freaking video. It was November 27. So to all the people that say, oh, your intrinsic value doesn't work. Oh, you know what, guys? For all the haters out there, that's fine. Okay. Go ahead and cut off the hand that likes to help people. That's totally fine. It's not the first rodeo where We try to help patients and the patients are not happy. That's fine. The best interest of the patients come first. That's understandable. You know what? But when people go ahead and basically say, oh, your intrinsic value calculation doesn't work. Okay, go talk to Benjamin Graham. Okay, go talk to Howard Marks. Go talk to Bill Ackman. Go talk to Warren Buffett. Go, RIP to Charles Munger, right? I've been doing this for a very long time. And I said, I believe the price target is anywhere between $18 to $20. Okay, ladies and gentlemen, I'm going to stop the video now here. If you guys want to watch the video in full, you guys can basically copy the title here, and you guys can go ahead and search it for yourself. Okay. Now, if you were to look at it, I said $18 to $20. Okay. What's the stock price now? The stock price is $20. Okay. I went ahead and made the video on November 27 when the stock price was around $8.39. Okay. Or sorry. Yeah. $8.39. Okay. So, I'm trying to help, and I get it. I'm definitely, I'm preaching right now. I'm definitely preaching, right? Because this is what makes me excited. Why is someone like me, I believe I've made it, right? I'm going to be a doctor. I'm not going to go into a soup kitchen ever again, right? If you guys know my story, you guys will know my story, right? So, I don't need to do this, right? Why am I doing this? Well, because I think health is integrated with how much money you have. Look at the social determinants of health. Rich people live on average 10 to 15 years longer than poor people, right? And the sad part is, even if you tell people, it's like almost biblical, like Noah. Noah basically said, and I'm not saying I'm a prophet, okay? That's so stupid. That's so like grandiose of me. But, it just showed so biblical what you can learn from the Bible. Noah told everyone, there's a big storm coming. There's a big storm coming, and it's going to flood no one listened to him. Nobody listened to him. Okay. And then here I am showing you guys, and it's not like I'm making these words up. You could go ahead and, I'm spelling this all wrong here. I'm trying to type out intrinsic value graph. You could, Google will fix it. You could go ahead and look at what intrinsic value calculation is. You could go ahead and learn about it, and you can see this thing is real. But the problem is we have the best intrinsic value calculation in the market. Okay. So, now let's go ahead and pivot to CLOV. Now let's go back to CLOV here. Okay. CLOV, what the hell's going on? 80 freaking pennies. Okay. In a couple days, they're going to get a letter from the NASDAQ, reverse stock split inbound. They got 180 days. Again, they'll have 180 days to fix the stock price up. If not, it's going to reverse stock split. Okay. So what the hell is going on? So we're going to go ahead and go to this video. Let's go ahead and read the questions like I promised. Continue asking questions. Andrew here. CLOV will hit $100.50 by the end of the year. Good morning from San Antonio, Texas. For some reason, Clover stock value is always slapped down when it starts. Yeah, there's a lot of shorting. The shorts volume has been increasing. This could be a potential candidate if this proceeds to 20-25% short. This could proceed into another short squeeze. Okay. Let me go ahead and double check this actually. Yeah, we're about 9%, I think, right now of total short. I think. Do you talk about CLOV because Lou versus Wall Street pumped it? No, I don't. No. RIP to Lou versus Wall Street. I talk about Clover because I'm in the healthcare space. You can go ahead and search Albert Allen, and you can search who I am. And I do believe in their technology, and I've made countless videos, which you have to go see and watch. Yep. Answer to that question. No. Preach, brother. Okay. Do you not believe the stock does a great job pricing things in the stock market? No, I don't believe that. That's where not Warren Buffett doesn't believe that. Howard Marks doesn't believe in that. Bill Ackman doesn't believe in that. But unfortunately, retail investors, because they have no knowledge of things, they think that the stock market knows better than them. The stock market may know something. No, guys. Okay. Okay. Let me go ahead and show you this. Okay. And by the way, if you go to our intrinsic stock terminal, intrinsic value calculation for stock terminal, we went ahead and put it on here. We put the intrinsic value calculation here, and it was able to show a DCF intrinsic value of $31 versus when the stock price was around $8.40. So if we were to do this again right now, and this is our automated one, we believe our mastering is actually a lot better. You go ahead and put HOOD here. You see, same thing, $31 intrinsic value with a $20 now stock price, right? Because the stock price went up over 100%. It pretty much more than doubled, right? You would have more than doubled your money. You put in $1 million, you would have made 2 million, right? More than 2 million. You put 1,000, you would have made more than 1,000. You would have made 1,300. You put in 100,000, you would have made 131,000, right? So ultimately, what we've created here works. Again, it may not be the fanciest, right? It may not, but I'm not trying to sell fancy here. Okay. I'm trying to sell something that works, something that I use. Okay. So, no, I do not, Isaac, I do not believe the stock market accurately prices things. Sometimes it does, sometimes it doesn't. Okay. Now let me go ahead and go back to what I posted a couple days ago here on the, our little private chat here, because I posted something really great here. Let me see if I can find it. So I can go to research here. All right, here it is. Okay. So right now, if you look at the Russell 2000, money market funds right now, institutional investors, hedge funds, they're not holding small caps. They're not invested in small caps right now. We're at a historic low. Okay. And the last time we're this low, small caps increased by a factor of 50% year. I mean, it was crazy. It literally outperformed the stock market for a decade. Okay. It literally outperformed the stock market by a decade. Institutional investors are going to come back into small caps. Why are they not in small caps now? Guys, the interest rates are high, but guess what? Every single day we get closer to the Fed cutting interest rates. Let me tell you something. The Federal Reserve said they're going to be cutting interest rates 3 times this year. Okay. Now, if they cut interest rates 4 times this year, that's dovish. If they cut interest rates 3 times this year, that's dovish. If they cut interest rates 2 times this year, that's dovish. If they cut interest rates 1 time this year, that's dovish. Okay. If they hike interest rates, that's not dovish. Okay. That's bearish. I don't think they're going to hike. Okay. So we are going to get interest rate cuts soon. And then once we get interest rate cuts, there are $6 trillion freaking dollars. You know that girl on the airplane where she was like, she's really cute. I really think she's beautiful. She's like, you don't see that? I see that person right there. I'm like that guy on the airplane right now. I'm looking at money market funds and I'm like, I see $6 trillion right there that are about to get smack dab erected into the stock market. And you know what? There's only a few people that see it, and those are the few people who are going to make money, right? All the other people, work your 9 to 5s, okay? There's no problem with that. But again, don't shoot the messenger, okay? I'm just showing you how to play the game, okay? I'm just showing you how to play the game. You think getting a year-over-year return of 61% is easy? You think me calling SMI stock year-over-year up 253% is easy? You think me calling it when it's 800% 8-bagger easy? Why do you think I wrote the book, How to Find a 10-bagger? I'm not blowing smoke up your ass. You can see it here in the proof, okay? So anywho, let's go ahead and let's go ahead, all right? So Rick, I appreciate you. We're going to continue making these videos as best as my ability. 80 pennies, let's go, right? Thoughts on Clover Assistant causing double work for physicians? Yes, I know what you're referencing. I'm the one who basically posted that information for you to basically reference. I'm the one who posted that regarding the physician. I'm in contact with that physician, and it's a simple copy and paste, which I think generative AI and integration will fix. It's an easy fix. The biggest thing right now that I'm looking at is, does Clover Assistant catch diabetes earlier? Yes. Does Clover Assistant cause a stabilization within the glomerular filtration rate, which causes a prolongation of the deleterious effects of chronic kidney disease? Yes. Are patients being more adherent to their medications? Yes. Can Clover go ahead and target multiple aspects of healthcare to basically speed back the forward of time to get the diagnosis earlier so we can get potentially to a possible cure, which is mostly medically medicated? Yes. Okay. Referencing previous videos from Andrew Toy in his Penn State meeting, which I'll go ahead and make a video about. Okay. Overall, yes, they are trying to shake retail investors out of the game. Let me go ahead and take off these stupid headphones. Dude, these AirPods don't even stick in my ear, dude. Hold on. Let me go make sure audio works here. Okay, good. So yes, they are trying to shake out retail investors. I don't care about the dilution. Go ahead and look at Citigroup. Go ahead and look at other stocks. Go ahead and look at AMD. They all did a reverse stock split, and look at AMD now. Look at Citigroup now, okay? At the end of the day, it's just an accounting shares issue, And that's all it is. Again, retail investors are going to have a whoop-de-doo. At the end of the day, it's the fundamentals. But unfortunately, this word doesn't go into the thick-brained people of retail investors. Because why? Because you were never taught about fundamentals. Go talk to me right now and talk to all the children in America in high school and tell them that they know what a fundamental analysis is. Your country has failed you, while the rich know about fundamental analysis. That's why you guys are freaking out. Okay. You love this live? Yeah, I'm on fire today, okay? I don't think they cut this year. If they do, it's after election, and we might get one cut, in my opinion. Which, you know what? If that's the case, that's dovish, right? Because it's not a hike. That's still dovish, okay? How many shares are you holding? A lot more than, okay, I'm going to be nice. A lot, okay? A lot, okay? Isaac, I'm holding a lot, okay? Good workout. Yeah, I'm very excited, Captain. I appreciate your all the support. But as you can see, guys, the data is in the pudding. Now, let's go ahead and let's talk about this, okay? Why? Why it, like Al, I get it. You made the video 4 months ago and you were right. You made the video about SoFi, you were right. You made the video about Palantir, you were right. You made the video about Enphase, you were right. You made the video about Tesla, you were right. You made the video about Nvidia, you were right. Okay, I get it. Okay, but why are you wrong about Clover? Why did you mess that up? Why? Ladies and gentlemen, Clover decreased their revenue. Okay, they're scaling back. They dropped their non-insurance side. They're not the only people that dropped the non-insurance side ACO. Other people are doing it because it's a faulty system. Okay, CMS is actively fixing this. They have someone on the inside that is going to be helping them fixing it. But let me tell you something. Why aren't they doubling down on their Medicare Advantage side? Because I think right now, when a company decreases their percentage revenue to near zero, plus or minus 2 or 3, I think they're creating a new revenue stream now, and they're basically trying to create potentially a SaaS business. Now, before people said, Al, SaaS, you're speculating, okay? You know what? Why the hell did they just hire someone who's a SaaS director? Obviously, this is base reality. Obviously, there's something in the works right now for Clover that is a SaaS-like subscription model. Could it be Quartet? I don't know. But ultimately, right now, and they even said this in the earnings call, they are looking for another path of revenue. And if this revenue is a non-insurance type of revenue, a revenue that is not an insurance-related revenue, then instead of having the price of sales of 0.5 to 0.67, it'll be a price of sales of anywhere between 3 to 4 to potentially 10 with respects to the SaaS public index, which we posted many, many videos ago. So if it happens, reverse split, I don't care. It's an accounting thing. That's just my opinion. Okay. Again, you can go ahead and be worried. I'm worried about other things. Okay. So thoughts on selling covered calls I've been holding. Yeah, we'll talk about that later regarding covered calls and whatnot. But right now, I'm trying to get down with this intrinsic value. Okay. I think Clover, all they need to do is grow their intrinsics. Speaking of the intrinsics, let's go ahead and pivot to this right now, real quickly here. Hold on. So let's go ahead and let's type in their current revenue of the non-insurance side. We're going to multiply it by 5%. Instead of Robinhood was 20% because their gross margins are 88%. I'm doing 5%. Okay. That's 61.5. We're going to go 10 years into the future when most retail investors don't know what they eat, what they're going to, what they ate last week. Okay. I'm not trying to put retail investors down, but it gets really annoying, because there's so much uneducated people out there and we're trying to help, but people are holding us like we're the enemy. All right. Go talk to your representatives and your senators and Congress people and tell them why they don't teach this information in high school, right? The reason why is because they don't want you to know this information because they want you to be the employee, not the employer. So right now, Clover's growing at 0%, let's say, because they're not really growing. 486. If we go ahead and do this, we have a recession of 57. We're not going to be in a recession. Any given year, we're in a recession of 20%. I don't think this is going to be the year. A bear case is 88. Base is 108, and the bull is 140, right? So I think once Clover, let's say, goes up and starts growing fast, let's say 25%, we're going to get around 8.5, $8.53. Now, if you don't recall, I made a little meme with Vivek holding a paper, and this was the exact price targets that I've done. Okay. Now, what happens, for example, if let's say Clover decides to turn on their growth machine like crazy, and let's say they're 400, 500, 600,000 lives, they get back to that older projection. Well, if that's the case, then we're looking at $25, $30 stock price. Okay. But right now, base reality, this is what they're at. If they increase it now, let's say 25%, then we can start seeing this. Now, guess what? It's currently 80 pennies right now. Guys, this is a 10 bagger. We are watching a 10 bagger right before our eyes. Okay. Now, is it going to happen tomorrow? I don't think so. Is it going to happen next year? I don't know. But ultimately, it's a farm, and I'm in here for the long run. Okay. If this video, you don't like this video, and if this is not enough, honestly, my recommendation is you get out of the stock market. You get out and don't invest, and just buy gold and be like every other American, where their house is their main asset that they have. Okay. I tried my best, and I'm only going to reach a few of you. That's just by definition, how this works in life based off of this, statistics. I'm only going to reach maybe 5-10% of you. So maybe like, 5 and 10 out of the people that are watching this video are going to understand this. The rest are not. Right. And maybe if it's more than that, then you know what? I think I've done my due diligence with the Lord, right? I've actually done what what I promised God that I was going to do, and help people see this, how this world functions, and using just simple algebraic math analysis, show people how this works. Okay. So see here, is the percent bankruptcy priced into your intrinsic value? So in terms of bankruptcy, any company can go bankrupt, right? My recommendation is look at what an intrinsic value calculation is. And my recommendation is read about 1,000, 2,000 pages, and you'll probably understand what I'm basically saying, right? We try to teach it, and we're creating the course right now in beta access, where you can go from, what I learned in over 10 years, I can teach it to you probably in a month or two, if you're, or less than that, if you binge watch the videos and the educational material that we're creating. But overall, I don't think Clover is going to go bankrupt, because their non-insurance side, their money-losing business is now gone. Now they have their profitable, industry-leading MCR. We've been repeating this over and over again. Watch my previous videos. Okay. And I'm happy that I reached you. And again, 5-10% most likely, right? And you're one of those, right? And it is what it is. That's life. If we can make it 15-20%, I'm happy with that. But I'm not like, I'm not holding my breath. It's just this information is hard. Okay. I'm not trying to put retail investors down. I don't blame retail investors. I blame in our sick country that does not teach this information, that teaches you basic algebra, but doesn't teach you how to apply it to make money. And whoever tells you that making money is bad, I'm gonna stop there. Okay. You know what I'm going to say. Okay. Making money will give you freedom. Making money will give you the ability to actually go to church and not have to worry about your bills, and actually have a relationship with your Lord. Okay. Making money, you're able to have a vacation and get closer to Mother Nature. That's just how the world works and capitalism works. Okay. And yeah, we are going to have a golf course party in the future. We're going to have a great party then. And one of the golf courses my father-in-law purchased. And it's a wonderful golf course. They're actually renovating it now. It's a famous golf course. Really excited. But yeah, I looked back. I've been following you for, yeah, exactly. Yeah. So look at what we've been saying. And hopefully, this does play into fruition, right? As of right now, it's growing at 0%. That's what Wall Street's looking at right now. Once they increase their revenue, they increase their SaaS, just like how the sentiment shift for Robinhood stock, the sentiment's going to shift for Clover. Again, right now, Wall Street doesn't care about small caps. Small caps don't get, they don't give a damn about small caps now. If you look at the overall money managers holding small caps, it's at a historic low. This is 2008, and they were holding more small caps. Guys, they are at an historic low. They are not holding small caps now. But interestingly, there are some that are, like Renaissance Technology. Interestingly, today, and like I told you yesterday, on our technical analysis. I said, IWM small caps just broke a strategic resistance line. Now I'm watching it if it can break this line here. Ladies and gentlemen, it just broke this line today. It just broke this line today. If this continues, small caps are going to continue rallying. We're going to finally get into a rally in small caps, right? Right now, we're fighting on this stupid 50-day MA. If we can go ahead and continue with this fight, then we can, right now we're here right now with small caps. Then we're going to go ahead and explode, okay? So overall, once this basically starts to recover, we're going to be in a good position. Overall, I think CLOV is operating on a descending triangle right now. As you can see, it's respecting this descending triangle, and it's going to play out until their fundamentals improve and they increase their revenue, find a more profitable revenue stream, or double down on what's working with Medicare Advantage. It's simple as that. Remove the noise, take out the emotion, focus on the math, okay? Focus on base reality, okay? That's it. So glad you're frustrated. There are thousands of stocks and dozens that will be amazing. We are taught that only 6 or 7 are worth it at any given time that everyone talks about. Day traders claim fundamentals don't matter. Well, day traders, go look at how many successful day traders there are. It's very rare, okay? Why don't you go ahead here? Go look at the richest people in the world, okay? Richest people in the world, okay? And you tell me, are they day traders? Are they day traders? No, okay? Jeff Bezos talks about fundamentals. Elon Musk talks about fundamentals. Mark Zuckerberg talks about fundamentals. Warren Buffett is the fundamental god. Bill Gates invests like Warren Buffett now because he taught him. Larry Page, same thing. Okay? You're going to talk about, Renaissance Technologies up here too. You're going to start seeing Renaissance. Bill Ackman is up here too. He's around $3-5 billion. Okay? Go look at the richest people. And if you want to go follow the day traders, go ahead and follow them. Now, do we use technical analysis? Absolutely. Do we have an AI? Yes. They use technical analysis? Yes. Okay. Again, look how many hedge funds are here. Okay. So I don't know if you're trolling or this is a serious question, but I'm hoping I'm giving you honest answers. Okay. And you, ladies and gentlemen, always a privilege and honor. I hope this video serves whoever it serves wisely, and I will see you on the next